Hey guys, so in today's video, I'm going to be showing you a trade that made me $2,600 over 4 different trading accounts. And not only did I take this trade myself, but I also sent it into the VIP group so everyone was able to take this trade with me. So let's jump straight up onto the daily time frame so you guys can get an understanding of exactly what I was looking for so that you can start framing up these trades yourself. So coming onto the daily time frame, what we can see is that we are very heavily bullish. Price has been creating a series of higher highs and higher lows. As we can see, we've been putting in higher highs, higher lows, and at the moment we've just put in this brand new higher high all the way up here, and now we're having this retracement. So we understand that the daily is bullish, and that's as quick as it needs to be. You don't need to spend too much time analyzing the daily time frame, because you have to understand that the daily time frame, it does take quite a lot of time for it to come into your areas of interest. So we generally use the daily time frame to give us a sort of a bias of where the overall trend is, and then as we scale down into the lower time frames, we can start to understand what the lower time frames are doing, and then put that in conjunction with the higher time frames to frame up an A+ setup. So that's as quick as it is on the daily time frame. We're bullish. So now we drop down to the 4-hourly, and what can we see? Well, first of all, we have to really notice the footprints that price leaves in previous price action. So what we can see in this leg of price right here is that price previously created a higher high, had a higher low, we came back and swept the liquidity below the previous high low, and then we went ahead and broke structure to the upside, putting in a brand new high high. Now, it's key to understand what previous price action has done, because it kind of sets the precedent moving forward of what price will do, because it's done it before. So it's best to spend time in the market understanding the footprints that price leaves behind. So now that we understand that price is bullish and previously it has taken liquidity big before giving us a brand new higher high, what we can see is that price has then come back down and put in this higher low. And then from there, we've had this sort of reaction to the upside. Now the reaction hasn't sustained because it hasn't taken us to a brand new higher high. We're just chopping around inside of the current trading range, which is this higher high right here and this higher low right here. So when we came into this trading day, which was actually Thursday last week, what I was anticipating is that I wanted price to come and sweep below this previous high low. And because I knew that price was targeting that liquidity, and this is where I anticipated price to push up from, just like it done previously all the way over here. So we had a sweep of liquidity, then we put in a brand new high. So my anticipation was that we sweep this liquidity, and then from here we're going to get a brand new high. So because my anticipation was now bearish, I started to look for counter trend trades against the overall bias, because I had a feeling that price would come and target this liquidity. Having said that, counter trend trades can work. We just have to understand that they won't be as sustained as pro trend trades. So when we take a trade in the pro trend direction, we can anticipate it to put in a brand new higher high. However, when we take a counter trend trade, we don't know if it's going to bounce right here and then go up. We don't know if it's going to come down a little bit lower and then go up, or if it's going to come down at all or just blast straight up. So counter trend trades are a little bit more riskier, but if you understand, again, the footprints that price has left, you can then kind of use this in line with the overall direction of the market to frame up these trades. So let me actually go ahead and replay the chart so that we can see in sort of real time what my anticipation was and how I was looking at the market. So coming onto the charts, dropping down to the hourly time frame, what can we see? Well, price is again very heavily bearish on the lower time frames, because it has to be bearish on the lower time frames for the higher time frames to have a pullback, right? So as we can see, we put in a lower low, lower high, lower low. So now our anticipation is that we get some sort of a lower high, then a continue lower, which is going to give us that lower low, that sweep of liquidity, and then from there we can see higher prices. So that was my sort of anticipation, and I paired this up with the Asia range. Now, the Asia range is a super powerful tool when it comes to trading, because the Asia range can be used as pools of liquidity. Previously spoke about on this channel multiple times, and this is one of the strategies that I actively use day to day inside of my own trading. As we can see, we've now got the Asia range playing out right here. And if we drop down to the 15-minute, this will become a little bit more relevant. So for me, the Asia range starts off at midnight UK time, ends at 7 a.m. UK time. So within this time, once we've identified our liquidity pool, we can see that this is the highest point that the Asia range created. So now once we take out the Asia high, this again tells me that price is looking to go lower because it took out the high first. So because it's taken out the high, we can then target the Asia lows as our very lowest hanging fruit. And this is something that I've mentioned in previous videos, where with my trades, I like to target the lowest hanging fruit, which is most recent areas of price that we can potentially target. Now, the reason for this is because I don't want to be the guy who tries and aims for 1 to 10, 1 to 20 risk to reward trades, only to get stopped at a break even 9 times out of 10. I would rather take the lowest hanging fruit, which for me in this case would be the Asia lows, because then at least I've banked that profit. And then from there I can leave a runner, and if it goes all the way down to extended targets, then happy days. But for me, always the lowest hanging fruit. So coming back to our trading, what I noticed is that right here, we've also got this internal sweep of liquidity, which we can see right here. And then from there, price push to the downside. So there is definitely going to be something inside of this range right here, which we can actually go ahead and identify. And then when we drop down to the 5 minute and we come over here and start to kind of look a little bit deeper into what price is doing, what we can see is that we had this sweep of liquidity right here. After that, price pushed to the downside, came back up to mitigate all of this supply zone, and then from there it pushed lower. However, what it left is this massive wick right here, which if we actually identify like this, and then we go ahead and drop down to even the more lower time frames, such as the 3 minute, and then all the way down to the 1 minute, what we can see is that this is actually our last point of supply, because if we zoom into this candle, what we can see is that this candle is the one that took, again, internal range liquidity just by a tick right here. And then from there, it gave us a break of structure to the downside. So this candle is very key because it is a very big reaction zone for price. So not only have we got this candle, but we've also got this fair value gap just below it. And then below that, we've got this other fair value gap. However, as you can see, it's already been mitigated. So that means our last point of supply inside of this higher time frame supply zone is this one singular candle. Now, if price comes back and taps into this zone, I expect an immediate reaction, and that is when we can start to look at entering in the trades. But this is all the way down on the 1 minute time frame. Now, if you're a beginner trader, I suggest that you don't go all the way down to the 1 minute because you will get lost in the noise. Please make sure you understand the markets, especially on the higher time frames, before dropping down all the way to the 1 minute time frame and the lowest time frames, because you will just get lost. So coming back up to the 15 minute, what can we see? Well, we've identified the internal range, the last point of supply inside of this higher time frame supply zone. So now we pair that up with the rest of our analysis. So what have we got? We've got a sweep of the Asia highs. Now, if we can push all the way up here into this supply zone, and then we get a reaction, now that is going to start pointing out to a very, very good trade. And that is exactly what I was anticipating. If I play price on, what can we see? Price with pinpoint precision came and tapped into that last point of supply candle that we identified. And then from there, we had this massive reaction to the downside. Now, this only confirms more my bias for the day and the overall trend, which is bearish. So now this is when I started to get excited, because I knew if we now get a market structure shift on the lower time frames, I can start to look for an entry. So if I continue to play price on, we can see that price then continues to drop a little bit lower and is creating a series of lower lows and lower highs, whereas previously it was creating a series of higher lows, higher highs, higher lows, higher highs. So it went from being bullish to now flipping bearish on the lower time frames. When we flipped bearish, we then came back up, tapped into this fair value gap, and then we had this reaction to the downside. So this confirms that we have now flipped from bullish to bearish after tapping into the last point of supply inside of this trading range. So now the last thing that I want to see is a confirmation of this trend going lower, because I want a confirmation entry. If I had gotten right here at the market structure shift, for me that's a risk entry, because that is the very first step in price shifting from bullish to bearish. So what I want to see is, I want to see a confirmation entry. So we've gone from a higher high, higher low, higher high, and then we flip to a lower low, lower high. So now what I want to see is, I want to see a break of this previous lower low right here. And once we get that break, For me, that confirms that we are actually now definitely going to go bearish. So if I play price on, we can see that we come back up for a little while, we chop around, and then eventually we get that break to the downside. So now, once we've got that break to the downside, this is confirmed. We have now flipped bearish. Now that we flip bearish, we can now drop down to even more of the lower time frames. So I actually went all the way down to the 1 minute time frame. And on the 1 minute time frame, this is where I was starting to look for my entry. Now, as we can see, when we look to the left right here, we've got this beautiful fair value gap on the 1 minute time frame, which gave us that break to the downside. So this fair value gap right here is what gave us this break to the downside. So I was anticipating price to come back up, tap into this fair value gap, and then continue lower. So that is where I took my entry. And then if we go up and we see just above this high is where I put my stop loss, because I knew if we break above this high, we're completely invalidating the bearish trend. And that would mean that we would have flipped back to bullish and then we would have continued higher. Now that is our last point of supply all the way up here. If that breaks, we no longer want to be in that trade. And as I said, if we come back up to the 15 minute, what I want to do is I want to target the lowest hanging fruit. Now for me, again, that would be the lows of the Asia range. So that is what my initial target was, because I just wanted to make sure that I banked some profits. So that is how I framed up my trade with the targets at the Asia lows. And as you can see, this is where I sent the trade inside of the VIP group as well. So Euro GBP is sell limit with all of the numbers for the stop loss and the take profit, and also a screenshot of the trade as well, just so everyone can see that there is no tampering going on with the trade. As you can see, this was sent back on April the 24th at 1 p.m. in the afternoon UK time. So once I've then sent the trade, as you've already seen on the 1 minute time frame, we've already come back up and tapped inside nice and easy into this fair value gap. And then from there, if I just play price on, what we can see is that price then drops, comes back up, gets close to our stop loss. It came back up to mitigate this last point of supply, as I was saying earlier. And then from there, it was nice and easy. We just dropped straight to our take profit. So we've hit the Asia lows. And as I said, that was the lowest hanging fruit for me. However, I did go ahead and hold this trade all the way down to this pool of liquidity. I left a few runners open on a couple of my accounts. This turned it into a 1 to 3.5 risk to reward overall. And like I said, I knew price would target this pool of liquidity. It doesn't have to target it, but I just had a feeling that it would, because it's previously done that before pushing higher. So I just anticipated price to come a little bit lower, take out this liquidity and then push higher. And if I do then go ahead and play price on, we can see that it does chop around, but after a while, it does actually go ahead and take out that pool of liquidity. So that's pretty much how I done a full top-down analysis from the daily time frame all the way down to the 1 minute time frame to find those last points of supply. And that is how I framed up this trade, sent it into the VIP group, and also made $2,600 myself across all of my funded accounts. So I hope you guys enjoyed this video of this trade breakdown to showcase exactly how I find and analyze these trade setups, so that I can send it inside of the VIP group and also take them on my funded accounts so we can make some money. But I hope you guys enjoyed this video. If you did, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.